Let's get right to it. Who is Tom Lee, and why does his opinion matter so much in the world of finance? In a landscape crowded with market commentators and self-proclaimed experts, Tom Lee stands out for a reason. His 10-year bull market prediction has caught the attention of investors everywhere, from Wall Street veterans to everyday people hoping to grow their savings. But what makes his voice so influential, and why should you care about what he has to say? Tom Lee is the co-founder and head of research at Fundstrat Global Advisors, a firm known for its in-depth market analysis and forward-thinking strategies. He's not just another analyst, he's a trusted advisor to some of the most powerful investors in the world. Before launching Fundstrat, Lee served as chief equity strategist at JP Morgan, where he spent years advising the world's wealthiest clients and institutions. His insights have shaped the investment decisions of major players on Wall Street. Lee's reputation is built on making bold, accurate calls, like turning bullish in early 2009, just before the market's historic rebound from the financial crisis. That call alone earned him widespread respect and credibility. When Tom Lee talks, Wall Street listens. His research is closely followed by institutional investors, hedge funds, and even rival analysts who want to know what he's thinking. But Lee's mission goes beyond serving the financial elite. At Fundstrat, he's committed to making high-quality research accessible to everyone, not just big institutions or wealthy clients. His team breaks down complex market trends and economic data into plain language, empowering regular people to make smarter, more confident financial decisions. Whether you're a seasoned investor or just starting out, Lee believes you deserve the same insights as the pros. Lee's philosophy is simple. With the right information and a clear understanding of the markets, anyone can build lasting wealth over time. He wants to level the playing field so that families, young professionals, and retirees all have a fair shot at financial success. So when Tom Lee predicts a decade-long bull market, it's not just a wild guess or a headline grab. It's a forecast grounded in decades of experience, rigorous analysis, and a deep understanding of market cycles. He's putting his reputation on the line, just as he's done before with calls that have proven to be both bold and accurate. Each prediction is a reflection of his commitment to transparency and accountability. Lee is known for being optimistic when others are fearful, often seeing opportunity where others see only risk. And right now, he's more optimistic than ever about the future of the market. That's why it's worth taking the time to understand his perspective, especially if you're looking to make informed decisions about your own financial future. So let's dive into the details behind Tom Lee's bullish outlook and see what the next decade could hold for investors like you. Ready? Let's go. Tom Lee's #1 reason for optimism: demographics. He believes that the most powerful force shaping the future of the stock market isn't a new technology or a government policy, it's people. The sheer number of individuals entering the workforce and participating in the economy can create a rising tide that lifts all boats. History shows that major bull markets are driven by generational shifts, like the baby boomers in the 80s and 90s. When a large generation comes of age, starts earning, and begins investing, it can spark decades of growth and prosperity. The baby boomers transformed the economy, fueling innovation, home buying, and a surge in stock market participation. Today, millennials and Gen Z, America's largest generations, are entering their prime earning and spending years. These young adults are not only joining the workforce in record numbers, but they're also starting families, buying homes, and investing for the future, just as previous generations did. This surge in workforce participation and consumption is a powerful engine for economic growth. As these generations spend more on everything from technology to travel, their collective impact ripples through every sector of the economy, driving demand and innovation. The peak influence of millennials won't hit until around 2035, giving us a long runway. That means the demographic tailwind supporting the market could last for more than a decade, providing a steady foundation for growth. This isn't about politics or short-term policy. It's a slow-moving, predictable force. Demographic trends unfold over years, not months, making them one of the most reliable indicators for long-term investors. Young people drive change, adopt new tech, and shape future demand. Their preferences and habits influence which companies succeed, which products become essential, and how industries evolve. Companies that cater to these generations are best positioned to thrive. Businesses that understand and anticipate the needs of millennials and Gen Z can capture new markets and build lasting success. This demographic wave is the core of Lee's thesis. It's not just a theory, it's backed by data, history, and the visible momentum of a new generation stepping into the spotlight. It's simple, powerful, and rooted in history. The story of the market is, at its heart, the story of people, how they live, work, and invest. People are the engine of the economy, and right now, that engine is just getting started. As this new generation rises, the potential for growth is enormous. That's why Lee is so bullish. He sees a future shaped by millions of young people, full of energy and ambition, ready to drive the next great bull market. There's another layer, the great wealth transfer. Over the next 2 decades, baby boomers will pass down tens of trillions to millennials and Gen Z. Unlike previous generations, these younger investors are more comfortable with stocks and digital platforms. As this inheritance flows in, much of it will enter the stock market, fueling demand and supporting prices. We're already seeing this with the rise of trading apps and social media investing. Combine rising incomes with this wealth transfer, and you get a tsunami of capital. This steady inflow creates a resilient market, with new buyers ready to step in on dips. It's a fundamental support system for stocks. Lee sees this as a key reason for long-term optimism. The tide is coming in, and it's bigger than most realize. What sets Tom Lee and Fundstrat apart? Their obsession with data and history. They look for patterns that have repeated for over a century, especially the impact of demographics on markets. This helps them avoid recency bias, the mistake of thinking recent trends will last forever. Lee sees today's skepticism as an opportunity, not a warning sign. Fundstrat analyzes everything from workforce age to market fear indicators like the VIX. For example, when the VIX spikes and then drops, it's historically marked market bottoms. Their advice: buy good companies, not just the market. Focus on businesses with strong products, management, and growth potential. This evidence-based approach helps investors stay calm and benefit from long-term growth. Be an investor, not a speculator. Every time the market hits a new high, it's natural for investors to wonder if we're nearing the peak. But according to Lee, those fears are overblown. He believes we're nowhere close to the top just yet. In fact, he argues that the current environment is very different from previous market peaks. Unlike the wild euphoria and unchecked optimism of the dot-com bubble in the late 1990s, today's market is defined by a sense of skepticism and caution. Back then, traders were celebrating every uptick. But now, even as stocks climb, many investors remain on edge. Investors are still cautious, scarred by the volatility and sharp corrections of recent years. Memories of past downturns linger, making people hesitant to fully embrace the rally. This persistent wall of worry is actually a positive sign for bull markets. When everyone is nervous, it means there's still plenty of room for optimism to grow. Lee keeps a close eye on real warning signs, things like sudden policy shocks, unexpected interest rate hikes, or runaway commodity prices that could threaten the market's stability. Right now, though, policy remains supportive, and there's no indication of a looming commodity crisis. Central banks are signaling stability, and energy prices are under control. Another classic red flag would be a surge in margin debt, as investors borrow heavily to chase gains. But that's not happening in today's market. Instead, investors are acting with restraint, carefully reviewing their portfolios and avoiding excessive risk-taking. Without widespread greed or reckless borrowing, the ingredients for a major market top simply aren't present. The mood is cautious, not exuberant. Lee believes we're still in the early innings of this bull market, with much more room to run before we see true signs of a top. In fact, the ongoing skepticism and caution in the market could actually be the fuel that drives further gains, as more investors slowly regain confidence. Don't let the fear of a market top keep you on the sidelines. Waiting for the perfect moment could mean missing out on significant opportunities. According to Lee, the real risk right now isn't being caught at the top. It's missing out on the continued growth ahead. Lee and Fundstrat didn't just talk, they built a way to invest, the Granny Shots ETF, GRNY. The name comes from basketball's underhanded free throw, unconventional but effective. Unlike most ETFs, GRNY is equal weighted across about 30 stocks, so no single giant dominates. Companies must fit at least 2 of Fundstrat's key themes: millennials, AI, cybersecurity, labor shortages, or economic reengineering. This creates a concentrated, high-conviction portfolio. Since launching in late 2023, GRNY has outperformed the S&P 500. It's not just tech. There's financials, healthcare, and more for real diversification. The strategy is disciplined, data-driven, and built for the next decade. It's a smarter way to bet on long-term trends. That's the Fundstrat difference. Let's get specific. What kinds of companies does Lee like? Two standouts: Palantir and big American banks. Palantir is like hiring a top consulting firm and elite software team in one. They solve inefficiencies and build custom solutions. Lee calls them a private equity company you can hire, creating value that traditional metrics miss. As for banks like JP Morgan, Lee is bullish despite their rocky past. These banks survived crises, regulation, and rapid rate hikes, and stayed profitable. The future? AI and blockchain will make them more efficient and profitable. Today's banks are evolving into tech powerhouses, still trading at reasonable valuations. These are the kinds of companies Lee believes will lead the next era. Being bullish doesn't mean ignoring risks. Lee acknowledges concerns like U.S. government debt, but says there are offsets. The U.S. owns trillions in undervalued assets, land, gold, resources, that aren't fully counted. As long as the dollar is the world's reserve currency, demand for U.S. debt remains strong. The Federal Reserve's independence is crucial. Any threat to it would be a major negative. For now, the Fed remains credible and data-driven. Interest rates? Lee's research shows rising rates aren't a problem until they exceed 6%. We're not near that danger zone. The real risks are manageable and not immediate. Smart investors stay aware, but don't let fear dictate their strategy. Lee's optimism is grounded in data, not blind faith. Know the risks, but focus on the bigger picture. That's how you invest wisely. So, what does all this mean for you? Tom Lee's outlook is a message of hope and empowerment. The next decade could be a huge opportunity to build real wealth. Don't fear the stock market. See it as a tool for growth. If Lee is right, sitting in cash is the real risk. Get invested. Contribute regularly to your 401k, IRA, or brokerage account. Stay focused on the long term. Ignore the daily noise. Downturns are opportunities, not reasons to panic. Focus on quality companies, not headlines. True wealth is built steadily over time. Be an informed optimist. The market's long-term story is one of progress and growth. You haven't missed the boat. You may be at the start of something big. Get educated, get invested, and stay the course. The future favors those who prepare and participate. Now's the time to take action.